So according to the New York Times, Donald Trump paid $750 in taxes? How the heck is that even possible?
Told you not to call here. It's not for sale. Quit texting me and aggravate.
According to the New York Times, Donald Trump paid $750 in federal income taxes the year he won the presidency. In his first year in the White House, he paid another $750 in income tax. He paid no taxes at all in 10 of the previous 15 years. That's crazy. I paid more taxes than him in the past year. No matter what you think about Donald Trump on who he is as a person or his business sense or his moral standards, whatever it may be, all things set aside, how the heck did he pay no money in income tax in those years? That's insane. If anything, I'm jealous. I want to know how he did it. Actually, I kind of know how he did it. Let's understand something real quick. Is this some type of fraud or a loophole that he took, or some type of crazy tax scheme that he put together to pay no income taxes? The answer is actually not really. This is normal tax practice. I'm gonna pull out my whiteboard real quick, hold on. So this is how this works. You make $100,000. Now, let's say you're not a business and you're just a regular person, you're a doctor, lawyer making $100,000 a year. Great, so what does the IRS say? Guess what? We want our fair share of this money. So on this 100K, the IRS says, guess what? We want 24% of that money. 24%! That means the entire year you worked, you basically paid a McDonald's salary to the government. $24,000. That's a lot of money. That means in the end, you're left with $76,000. That's incredible. So that's insane. $76,000 is what you're left with. But what does that mean for you? Here's the thing. It's different when it comes to a business. So now let's look at it from a different standpoint. You're a business and you made $100,000. Here's the thing. Uncle Sam can't tax you at the top, at the $100,000 that you made as a business. So off these $100,000, you take your deductions. Let's say you take your business deductions for your mileage you've driven. Let's say it's $5,000. Then you deduct maybe some computers or things that you bought, $2,000 in your business. The internet you pay yearly. Just to make things simplified, all the things that you purchase to run your business are a deduction. Let's say the deductions are about $50,000. So now what the IRS says, okay, you made $100,000, but you got $50,000 in deductions. You're left with $50,000. Super hard math that I picked. Now, instead of being taxed 24% up here, according to 2020's tax brackets, you're taxed at 22% if you make $50,000. 22% of $50,000 is $11,000. 50,000 minus 11,000 means that you're left with $39,000. So instead of paying $24,000 in taxes, you paid $11,000 in taxes. That's how Donald Trump was able to avoid paying so much money in taxes. Now the fact that he took so many deductions and was able to reduce his income tax down to $750, it's up to the IRS to figure out whether he took improper deductions, meaning that he took personal expenses and wrote them off as business expenses. But the reality of it is the majority of his expenses are probably all business expenses. When you go on vacations, if you spend more than 50% of an 8-hour workday working while you're on vacation, it becomes a business vacation. If you buy a new vehicle for your business and you drive it for more than 50% of your business, guess what? It's now a deduction. There's so many deductions that you can take, and it's for the American businessman. Some of these things would be ordinary things that you purchase, like cell phones, computers, but if you're using them for your business, now they're business deductions. So even though he was writing off so much stuff and taking so many losses, these are all 100% legal. Now, I am not a tax consultant, neither am I some type of tax attorney, tax consultant. I can't give you any type of tax advice whatsoever. But if you talk to a qualified CPA or tax accountant or a tax attorney, you can see what deductions might fit your lifestyle and your business. That's why being an employee kind of sucks sometimes, because yes, you are taxed at the highest rate, but there's a reason for that. Usually somebody who starts a business carries a lot of risk. Here in America, we do favor small businesses and large businesses because they do create jobs, and without jobs, there's no money. If there's no money, nothing can be taxed. So that's why a lot of businesses are taxed at a lower rate or take big losses or are able to pay less income taxes. And it's for the sole purpose of trying to keep the business alive. What Donald Trump did, was it illegal in the end? It's completely up to the government to figure out if he took improper deductions or if everything that he wrote down was perfectly legal. So I hope you found this video informative, guys. I hope you enjoyed it. This does not interrupt any of my daily vlogs. This is in conjunction with it. I just figured I'd shoot a little video out there to talk about it, because I had never talked about taxes and how they could affect you with your business, especially being a real estate investor. And even though we didn't touch on a lot of topics on what you could really deduct, or what kind of taxes can you avoid paying legally, this is just a little tip of it. There's some great books out there like Tax-Free Wealth by Tom Wheeler, and I'm pretty sure there's a few other tax books that I just haven't heard of yet that are excellent and touch on so many different subjects that you can actually use some of these deductions even in your daily life. So take it easy, everybody. I hope you guys are prospering, and I'll see you guys later.